Hello, welcome to NewPod. What should be checked before a signature transforms an attractive project into a real commitment? Legal and contractual risks often hide in the gaps between a commercial presentation, available documents, and written obligations. This episode offers a clear method for identifying them. Someone discovers a real estate program that almost perfectly matches their search. They like the location, the visuals are convincing, and the announced timeline seems compatible with their plans. During the meeting, they receive a lot of information in a short time. The price is presented, several documents circulate, and an upcoming deadline gives the feeling that a decision must be made quickly. This fictional situation illustrates a common moment. The desire to move forward meets uncertainty about what signing actually entails. Legal risk isn't just a spectacular trap hidden in fine print. It can arise from incomplete information, a misunderstood term, an assumption taken as a commitment, or a document read out of context. Before committing, it's essential to slow down, identify the exact nature of the project, and distinguish between what was shown, what was said, and what is actually written. Enthusiasm is legitimate, but it doesn't replace this structured review. Imagine an advantage highlighted during the presentation, then appearing differently in the provided documents. This discrepancy doesn't automatically mean an irregularity exists, but it calls for clarification before any decision. A commercial phrase might summarize a complex reality, while a contract specifies commitments, conditions, and responsibilities. What seems obvious orally might depend on a reservation, a timeline, or another part of the file. The right reaction is to ask for a concrete, written answer linked to the relevant document. A repeated promise doesn't become stronger because it's appealing. Conversely, a difficult text shouldn't be accepted as inevitable without explanation. A significant real estate decision deserves the support of a competent professional, especially when a clause remains ambiguous or financial consequences are substantial. This episode provides a general method. It does not replace any legal, tax, patrimonial, or real estate advice adapted to a particular situation. A contract organizes commitments between parties. To analyze it, you first need to know who is committing, what they are committing to, when, and under what conditions. This simple framework avoids getting immediately lost in technical vocabulary. It also helps identify missing information. The identity and role of each party must be understood. As a salesperson, a developer, a financial partner, or another professional doesn't necessarily have the same mission. The project's objective must then match the presented documents. Characteristics, price, announced deadlines, and important conditions form a coherent whole to be read together. An isolated phrase might seem reassuring while depending on a definition located elsewhere. Contractual risk arises when the buyer assumes an obligation that the text doesn't clearly state, or when they underestimate their own obligation. Verifying doesn't mean systematically suspecting every interlocutor. It means transforming a general impression into precise understanding before the decision produces effects that are difficult to modify. 3 categories of vigilance structure this topic. The first concerns ambiguity. A clause might have multiple interpretations or use a term that isn't clearly defined. The second relates to information. Essential data might be missing, remain too general, or not be accompanied by verifiable justification. The third touches on project compliance, meaning its alignment with applicable rules and requirements. A doubt in any of these categories doesn't call for personal improvisation. It justifies a request for clarification and, for an important decision, professional advice. The response should clarify which document is authoritative, who bears responsibility for it, and how uncertainty will be resolved. A voluminous file isn't necessarily complete, just as a short contract isn't necessarily simple. Quality is measured by coherence, traceability of information, and the ability to understand consequences. This approach makes risks visible without claiming they can all be eliminated. Real estate marketing helps present a project, make its uses imaginable, and communicate its qualities. This role is legitimate, but it shouldn't be confused with that of contractual documents. An image, an ambience, or an attractive phrase creates a projection. It doesn't necessarily describe every characteristic with the precision needed for a commitment. To compare the presentation with the documented reality, each important promise must be translated into a verifiable element. A statement about the location refers to concrete information about the environment. An announcement about the timeline must be linked to written steps and conditions. A quality argument deserves to be connected to identifiable characteristics rather than an impression. This approach doesn't seek to pit marketing against real estate. It honestly defines their respective places. The former attracts attention and explains a proposal. The latter requires data, documents, and responsibilities. The more an assertion influences the decision, the more its concrete basis deserves to be requested before signing. A guaranteed return, assured value increase, or certain quick gain constitutes a warning signal. Real estate development depends on the market, location, financing, timelines, and project quality. No commercial material can neutralize these variables. A numerical projection can help explore a scenario, but it must be distinguished from a guaranteed outcome. You need to ask for the assumptions used, check what's included or excluded, and consider what happens if data changes. Time pressure increases risk when urgency prevents reading or comparing. An announced scarcity shouldn't lead to signing an incomprehensible text. Similarly, trust placed in an interlocutor doesn't negate the need to obtain essential information in writing. Credibility is built through transparency, consistent answers, and the ability to verify. A reasonable discourse acknowledges uncertainties instead of promising the project will escape ordinary market conditions. A development project doesn't produce results in a vacuum. The market determines an environment of demand, supply, and prices that can evolve. The location influences usage, attractiveness, and comparison with other properties without guaranteeing future value. The project's quality concerns its overall coherence, the clarity of its design, and the ability of stakeholders to keep their commitments. These dimensions must be examined together. A highlighted location doesn't automatically compensate for an imprecise file. A qualitative presentation doesn't eliminate market exposure. A favorable trend observed today isn't a guarantee for tomorrow. The buyer or partner must therefore articulate their real objective, then verify if the documented characteristics needed under reasonable assumptions. Comparing several options provides a benchmark that discovering a single offer does not. This comparison focuses on conditions, available information, and risks, not just an advertised price or the emotion evoked by visuals. Financing and deadlines directly link the real estate project to the individual's situation. A change in the timeline can have practical or financial consequences, even if the property retains its qualities. Therefore, it's essential to understand the announced deadlines, the conditions they depend on, and the margins of uncertainty acknowledged in the file. Financing must be viewed with the same caution. Its cost, duration, and compatibility with the project contribute to the overall balance. It's not enough for a scenario to work with all favorable assumptions. A reasonable decision also examines what changes when the market, financing, or timeline deviates from the initial projection. This analysis is not personalized advice and should be accompanied by competent professionals. However, it provides a useful rule. Do not isolate the real estate contract from other commitments necessary for its completion. Documents, dates, and conditions must form a clear timeline, early enough to allow for serious verifications. An ambiguous contract should halt the move towards signing until a reliable explanation is obtained. The warning doesn't just come from a technical word. It also appears when an oral answer changes depending on the interlocutor, when a reference to another document is untraceable, or when an important consequence cannot be clearly summarized. The correct reflex is to note the passage in question, articulate the difficulty in simple words, and request written clarification. If the issue goes beyond a factual verification, a competent professional should review the entire file. A clause is never understood solely by its title. Its scope depends on the text and its articulation with other documents. Copying an interpretation found in another project would also be risky, as the contractual context may differ. Taking the time to understand is not losing an opportunity. It is ensuring that the decision is based on the actual project and not on a supposed version of its conditions. Lack of information constitutes another serious signal. This could be an announced but unprovided document, a number without methodology, an important characteristic described only orally, or a consistently postponed answer. The appropriate reaction is not to fill the void with a favorable assumption. One must list the missing elements, ask when they will be available, and defer commitment if their content could change the decision. Doubt about project compliance requires similar vigilance. The individual involved doesn't have to resolve a complex regulatory question alone. They should seek advice from the appropriate professional and consult relevant documents. The developer or partner's credibility is also verified by their ability to provide traceable information and welcome specific questions. Pressure aimed at bypassing these checks erodes trust. A serious file doesn't guarantee future results, but it at least allows identification of commitments, uncertainties, and responsibilities before choosing. For each option, a factual sheet helps separate data from impressions. It can group the identity and role of stakeholders, the project's essential characteristics, the presented price, important conditions, contemplated financing, deadlines, and received documents. A separate column can host points to be confirmed, so that an unknown is not confused with a favorable answer. Numerical information must be accompanied by its source, date, and supporting assumptions. Elements that are only oral are noted until written confirmation is obtained. This method does not replace professional contract analysis, but it prepares more useful questions and makes multiple offers comparable on a common basis. It often reveals that two propositions close in price differ in their conditions or the quality of available information. The goal is not to mechanically produce a winner, it is to clearly see the compromises before deciding. Verifying the credibility of a partner or developer isn't based solely on an impression of seriousness. It examines the consistency of their identity, role, documents, and responses. A reliable interlocutor should be able to explain who bears each commitment and direct to the corresponding documents. Relevant public or official information can complement this check, with the help of a professional when its interpretation requires expertise. The reputation or brand quality can provide a clue, but it doesn't replace examining the specific project. It's also important to clearly identify the materials, names, or signs used in communication, as rights and responsibilities cannot be deduced from visual resemblance. A healthy commercial relationship accepts the time needed for comparison and doesn't turn every question into an obstacle. This verification remains proportionate to the importance of the decision. The heavier or more irreversible the commitment, the more essential information traceability and serious support become. Real estate easily sparks the imagination. One envisions oneself in a place, an activity, or a future financial balance. This emotion sometimes helps identify what matters, but it shouldn't be the sole decision maker. Pressure adds another bias, when a short deadline prioritizes the fear of loss over understanding the file. To return to a reasonable decision, it's useful to separate 3 stages: discover the offer, verify the information, then choose. New important data logically leads back to the verification stage. Comparing at least several options or scenarios helps distinguish what belongs to the market from what belongs to a single interlocutor's discourse. Objectives must remain realistic, compatible with constraints, and formulated without guaranteed returns or assured increases. A competent advisor provides an external perspective on legal, financial, or patrimonial consequences, depending on their specialty. The freedom to decide becomes more real when the person understands what they are consenting to and which uncertainties they are accepting. Before the final decision, a review of discrepancies ensures that the analyzed project still corresponds to the one that will be signed. Documents may have evolved during exchanges, an assumption might have been clarified, or a date changed. It's necessary to compare the current version with the factual sheet, resolve any open questions, and retain crucial answers. This review also covers roles. Everyone should know which interlocutor is responsible for the discussed commitment. If a modification affects the financial balance, the timeline, an essential characteristic, or a contractual obligation, its effect warrants a new professional analysis. Negotiation fatigue shouldn't reduce vigilance at the moment when consequences become concrete. A serious validation isn't merely an emotional confirmation. It establishes that documents are consistent, accepted uncertainties are identified, and the person has the necessary time to consent. A final significant doubt still justifies a pause rather than a rushed signature. A good real estate decision relies on clear information, realistic objectives, and serious support. Legal and contractual risks don't disappear with a reassuring presentation. They are managed by identifying parties, commitments, conditions, documents, and still uncertain points. The market, location, financing, timelines, and project quality continue to influence the outcome. No contract can guarantee profitability, future value, or quick gains. When a clause is ambiguous, a promise seems absolute, essential information is missing, or doubt concerns compliance, the right decision is to suspend commitment and seek appropriate advice. This general approach doesn't replace personalized advice. However, it creates better conditions for negotiating, comparing, and communicating without confusing trust with a lack of control. The next episode, The Stages of a Real Estate Development Project, will place these verifications within the complete progression of a real estate operation. Gather documents, note ambiguities, and have any important decision accompanied by a competent professional. Tune into NewPod again to explore the stages of a real estate development project.